Hello, welcome to another video of ES Futures Trading Stream. ES Futures Trading. Hmm, My bad, sorry. Okay, I hope you have been early today. I didn't make a proper market update today in the morning because Jim has a webinar. I wanted to hear what he has to say. Um, But we in the short time that we were or before Jim had or started his webinar, we were talking about how this market was too short here. I mean, too long, right? But going higher in short call mode. This is particularly this day, which was yesterday, very typical of short covering rally, and in the daily time frame also, particularly having the typical shape of short covering rally, and being this market in the daily time frame, uh, with I cannot see here. Forming a range here, but nothing supporting the gap. And the gap, this ginormous gap here, very emotional trading day here. I guess it was last Friday, end of the month. End of the month, typical also, short squeeze. Trades being squeezed at the end of the month. It happens all the time. But he mentioned something else, right? That this market can be really very elongated to the upside in the late stages of trading, which is something also. I guess I don't know. We discussed this. I guess we discussed that one as well. We were talking about how this weekly time frame, failing to take this high actually targets the opposite side of the ledge, which is 43.27. And today we have this big gap to the downside, right? Which started yesterday. And what Jim does is Jim puts things in context, right? I wasn't yesterday in front of a trading desk. I had to do something else, and I couldn't see also the FMC minutes or whatever these guys have to say in the TV. And there was, but I did a replay for myself of yesterday. What happened here? This short corner was really grinding to the outside here. We have a gap here. I was trading Monday as a overnight inventory. I was kind of confused, right? Because it has 500,000 contracts traded, which is not a small thing. It's not about half. Right now, for example, how much we have? I guess today, right now we have 700. It was not a bad day. And the gap, man, this gap, just big gaps are. I was following is this day here when my time frame is shorter than Jim's. Jim has his time frame is a little bit bigger than mine. But I was the way how the market react this day was traders just can't get long here. Once you get this gap here, you cannot get long here. I mean, you cannot make up your mind to get long here because we tend to think, okay, the market is too high, has rallied too much, it's time to break. It's going to collapse on itself. But it still has steam to the upside. What happened here is the same thing. The same thing. We have this big gap. The market is so elongated to the downside now, and you know, I cannot be a seller here. Right? That's what most people think. I cannot be a seller because it's too much. It's time to go back. Right? And actually, it doesn't work like that. Right? If you have a chance, it will help you a lot. If you see the last webinar that I mean, he posts his webinars here. This is the last one. It will have a lot to it will have a lot to understand, to help you understand market dynamics. Why gaps, what bigger gaps, for example, have low odds of being closed. And one of the best trades happen when the market tries to close the gap and fails to close the gap. Right? I haven't seen that in a while. I remember seeing sometimes market trying to fill the right now, for example, the market could be making an attempt to close the gap, but still feels to do that. Feels that the market needs to take this high. Right? It's very unlikely the market is going to close this gap today. But shows of high volatility or uncertainty are actually these things that happen, right? One big gap being closed by another gap, and actually this gap closed another one. There was another gap here way back, I guess I don't remember, May maybe, and this gap closed the gap with another gap, and this one is being closed with another gap now. So very uncertain. And what I follow, for example, is we have this FMC. We have another one at the end of the month as well, where possibly we are going to have a 25 points increase on the rate. But what I was talking about. Oh, I was talking about gap. I forgot what I was talking about. Gaps. I was following this. It helps. When you start seeing. Today is a different day. There's something has changed in the market. There's some change in the market. Let me show you why I say that. I have these histograms here. Nice selling here. This was you want to go short. This was your short here. Market just it couldn't even get to the high of the first lower of the lower distribution of the overnight high, right? Fail this. This is a short here, and your stop is the higher this downside continuation will be closing the gap. It was a risky trade. I have to acknowledge that it wasn't easy. Yeah, you have to see continuation here first, closing the gap, and once it closed the gap, it just gained momentum from that point. Below, what do we have below? That's the thing. Where the market, because markets do that, right? The markets will go to the place where two sideway trading can take place, and where that can happen. That was where that can happen. That's what I was thinking, and I was looking back. To this day. I had this day. This is a really terrible day. This day, horrendous day. Very bad day here. Very, very technical, very short-term trading here. My first thing was this area here. When I start to see accumulation of volume here, can you see the volume here? I have volume, and I have also big blocks of trading here. Selling, buying, I don't know. Okay, but I could notice that this was selling. Okay, this was selling because as soon as this happened, market just break. and then it has a more rally, and then downside continuation. Same thing goes here. Things started to change down here. This is what I always say is something is changing the market, because it has been a long time since I saw this amount of blocks here. 1,000 trades, 700,000 trades, 2,000 over here. Blocks, right? I was saying that I noticed this as a selling, this as a selling as well. And I notice how this histogram, this part here, what is happening now started to happen here. All right? Because the market didn't rally here. The market rally here in this period, rally here, all the way back here, and then just break from here. This high wasn't tested. This a market going to the downside, higher odds of market going to the downside will be market opening here or somewhere, and then rallying and drying here at the top. Okay, this opened up here and then just boom comes to the downside. Then we got more volume, and this volume here, this selling here, not this one, but these high blocks here, were some buying here. There was some buying here. This was the first time when the market actually rallied when these big blocks appeared. It didn't break here. So that was a sign that this market may have got too short now. Too short. Notice we have more than 50 points today to the downside. The market may have got too short, and there's some rebalancing that could happen here. And market just keep getting short. Market was selling, just grueling here to the downside, grueling here. Grinding to the downside. It was grueling to see. The next thing, you have to see these things as well. I don't know if you can trade these things. But the market was getting too short, and when the market opened, this period opened somewhere in here, I will just get, a pullback to halfback here, and then it's just dangerous close to this high, and having this volume here, buying volume here, that you could identify, right? And notice what I follow, I am focusing a lot on this, because there's a higher volume here as well, not just big blocks but volume. Okay, I like this 10,000 here and 10,000 here as well. Okay, there could be some changes when this period here opens somewhere, and it just happened, right? It just happened. It has a breakout from this level, and this is a counter trend, though. Okay, what is the context? Again, the destination, the potential destination I saw after the market took this volume here. The next one was down here. What do we have below here? This is high concentration of a volume here. I don't see nothing here, nothing here. This part of this could have been removed here. I don't know how the overnight was. There is some high volume in this area. Yeah, this could be the next thing. This area here to the downside. Or am I wrong? No, this is it. But it didn't have downside. It just dry here, and being the market too short with this big gap, there was there was some odds here that the market could have some kind of rebalancing. And by the time there were 3 distributions here. I hope you have noticed that there were 3 distributions down here when the market came all the way down to here. If the market there was something serious to the downside, the distributions would have been kept. That was my thing, right? But closing the lower distribution, when the market rally here, okay, that told me that this could be a rotational day. You know, maybe most of the downside movement is over. We may see some rotation today, the rest of the day, and one time frame lower ending kind of early in the session actually increases the odds. And not just that, but this period also closed the second distribution, so that you will have nothing here. Now, what I am monitoring now is, okay, if there is some rotation here, it's going to have, is the rotation is the rotation going to be, it is going to be in this area, it's going to keep building up here, or are we going to have downside extension, or the market is going to try to close the gap here? Okay, keeping this market down here in this area from here to here actually favors, for me at least, favors the upside here, because it will be a sign that market has gone too short. And tomorrow, okay, oh, this is what I forgot when I was talking about the gaps. When we have these news releases, you have FOMC Wednesday, and we have non-farm payrolls tomorrow. What you will see is the market having this kind of movements, right? To the upside, sharp upside movements, and then sharp downside. When you have this one, but not, you have to notice those things, right? When are this kind of news events in the horizon? Because this is just inventory being rebalanced, traders hedging positions, hedge funds rebalancing their portfolios before the news, right? And it happens more often than you believe, than not, that we have this kind of upside movements and then downside movements. In the same way as it is important to see what we have behind today, for example. Okay, I have removed I have made my, because I don't wanna overload my charts. As important as is looking behind, it is important also to look ahead. To look. Why am I being ahead? What can happen? What is there? What is out there? And for that you have, I found out this calendar be very useful here. Okay, you can accommodate. This is what I like from this. You can accommodate next week. You can see next week. You can see this month, or you can see next month, right? And I saw next month. I mean this month. What do we have for? We have this. What is non-farm payrolls Friday? Next thing, core. I mean inflation next week. That's also important. PPI. The same week. Oh, look at this. GDP China as well. What else? Fed rate decision. And you can see also next month, right? Because I mean, this is not my time frame. Another calendar that I don't know what. Okay. Now use the calendar. I guess Dorman. Yeah, Dorman. This is my broker. July. Let's see what this. I mean, I found out sometimes this is very useful. I can see. I mean, just double check, right? Unemployment. This is July. 7 export unemployment. Yeah, employment 7. So this is I guess it's meet. Uh, this is another time for another time. Um, to be aware of what can happen, what is out there that can impact your trading. Okay. Now, okay, this market is very short. Will the market be able to get at least inside this is oh, come on. You know, notice this thing, all right? A lot buy, a lot, all of these sellers here, all the selling, all the short inventory now has been removed, all right? What do we have tomorrow? We have this event, right? No payrolls. These shorts here could be feeling pressure now, all right? Could be feeling pressure. However, there are some loans here. These loans here have been forced to liquidate, and inventory is very short. Now they have a lot of shorts here, a lot of shorts. Notice how this overnight has a prominent POC that is pretty much exactly at the high of the gap. The gap closed. We have this prominent event tomorrow. Notice how congestion is happening here. A lot of congestion. This market is not having good times trying to close the gap, trying to get even closer to this. Okay. This seems, I say, I mean, I don't like it when the market do these kind of things here. When the market do these kind of things here, this kind of histograms for me, it's good to come back to check. It's already checked this one, but the thing is now where the inventory is, right? Where the inventory is right now. These shorts are now very nervous. Remember, if tomorrow there is another event tomorrow, right? Tomorrow can close. It is have good odds of doing something here. I'm not saying it's going to happen because a lot can happen from here to the close. There's still a lot of time going on here. But notice how this market is really struggling to go to the upside. The same struggles they had here, same is happening to the upside. Now, volume. One of the things to check to monitor your trade for downside continuation was volume. What the market is doing here today. Higher volume at the opening, increase it, it keeps being higher, keeps being higher, keeps higher, keeps higher. It decreases a little bit here. Oh, how much is it? Like 5%? Oh, 9%, 15. Notice how it's decreasing a little bit, but it's higher. No, overall, it's higher than yesterday. That would be the main thing. How this volume closed, and notice how yesterday, right? Yesterday was very low relative to the previous week. That was, when all these things all these pieces, the information start to, to accumulate, to overlap to each other. And actually pointing to the downside. That was it. That was your trade there. Okay? If you couldn't get the overnight, if you couldn't get something here yesterday, this was it. Okay? This was it. But you have to be aware also that this could be something that the market has got too short when the market opened here, right? Notice how it has two distributions here, right? This period have one here and another one here. But right now, to me, there's nothing now in this market. And now, in the bigger picture is you want to see the bigger picture as well. What's going on? Right? I have, let's see if I can make it this. The monthly, there's no excess here. You also see in the high, but still outside the range. It will be very, some opportunities can happen if the market comes close to the high of this range. It could look inside, getting inside and having done some continuations could come all the way down to here, right? Not getting inside also, and you look to the upside weekly. The first thing in the weekly, I would, because there was a lot of technical trading going on in this market. I would see the market buys from this level. Well, this level is 43.70, something like that. But the ultimate destination, 43.30. Okay, 43.30. Is that a monthly reference? Let's check. Yeah, can you see? 4030 is the same reference we have in the monthly. So we have monthly and weekly in the same, have the same reference here. Now, daily time frame. And this is the thing here. You have this range, all of this. There's a lot of technical trading going on here. And we have all done the same sometime. I did not consider, Jim put this as a gap, but I don't consider this as a gap. Here now we have a gap to the upside. You can put it back here if you want and duplicate that. But I wasn't considering this as a gap because this is the rollover contract rollover. Also because, but that's why I say that my time frame is different than him. Okay, he has a different time frame, and for him this was kind of like, it is not going to focus on one specific thing, right? But what he has is just so many gaps here, 1, 2, 3, 4 gaps to the upside. Right? That's too much, too elongated. And notice you got to be aware also how far this market has got from the 50, 50 and the 100 here. There was a lot of buying here, but this just kind of get ahead of itself now. And on the upper side, we have these century numbers as a reference, the 45 and the 46, which coincide with these highs here. Technical traders are going to be, wow, this is what is this, reverse M or W or triple M? I don't know what this is called, but I forgot how they call this. But this is just too low. It seems to me that the market has get too long here. Now the question here is, the thing here is that this market, what is happening here? Market closes the gap. There's no change here. Actually, having a big gap here actually could favor the upside. No, notice how there's no excess on the upper side. There's no excess here, right? And that could be misleading also, right? We don't have excess, and the market is going to come back high. And actually, the market sometimes can get too long to keep going higher, that it needs to break. If this market cannot, I guess the next thing to monitor here for me now would be the bigger time frame. Okay. What I mean with the bigger time frame here is if this market cannot re-enter this range here, that will mean the bigger time frame investment money is getting into the market. Either by by own will or being forced. What's the difference? They're getting in, right? That's the thing here. A lot of short term trading is changing now. I hope you can see there is change. There has been a while where the weekly has been the predominant time frame. This we trade. Well, I trade the intraday, right? The intraday, the very short time frame. But that's what being able to identify which trade is dominant, okay, is important as well. Now, my question now here, that being said, my question now for today, for the intraday, is: are we going to have a rotation here? Notice how I don't see, you don't see any big, you don't see blocks here. I would want to see what happened at the closing as well. Yeah, if there is enough amount of buying here, or blocks, big blocks here. I forget where there was an area which huge volume. I guess it was, I don't remember. Huh. Like 10,000 at the closing. What it was. What day? Okay, this was this? Yeah, this day. This is, what day is this? July 1st. This is Monday. Is it? July 1st? Huh? Oh. Oh no, I did my homework on July 1st. This is Friday. Okay, this is Friday. Where are you? Where are you? Is that you? Come on. I guess I lost it. Where are you? Yeah, this one. 7:30, yeah, I did my homework at 3 a.m. in the morning. On Saturday. So this was Friday. What level is this? 44.80. Let's call it 44.80. Let's call it 44.80. Okay, I don't want to hit anything there by accident. Okay, 44.80, 44.80. Oh yeah. I guess I didn't mark it here because I got this. But just to use a high volume level here, 44.80 here, 80 here. This day on Friday, there was a lot of volume here, Somebody was interested in keeping the market high, keeping the market. Don't let it fall here, like this day here, at 44.80. And then there was a lot of accumulation of volume here above this area. And once the market took that, there was a free fall after that. That high accumulation volume would be. Oh, and notice that. Come on, notice that. But notice what Saturday and last is. Just right there. Right there. Okay. After all these days, right? 1, 2, 3 days. And it's just there. This is this area. Okay. And what is that? Build up. That's building up. Building up a volume here. Not that I am not saying that somebody is building up volume there to let it fall before, but the market, that's a contest, right? The market just get too high, too long here, and you just cannot keep going high, try to go high, but you just can't. What I'm doing here is I am comparing very, very short time frames with bigger ones, and making that by making that comparison, I can see how the market reacts. What are the market dynamics? How market works, how markets work, which is what we all, I believe, may aim to understand. Now, I think this market, it looks like this market is going to make an attempt to close the gap. it looks there. And that would be interesting, okay? It makes an attempt to close the gap here, how far it can go, and if we going to have liquidation at, afterwards. Because the last thing I want to be in a market that is super short, I don't want to be alone. In a market that is going to the downside. This market is going to the downside. Notice how value, this was inside value here. If I consider, another sign also for today was, this market couldn't take this high, couldn't take Monday high, couldn't take, and this was two overnights here that were really nice days here. All right. Unless there's any questions, I guess I'm going to call it the day. This is just a market update. I wish you guys a good rest of the weekend. Good rest of the weekend, my bad. Good rest of the day. All right? Stay safe. Bye-bye.